All right, let's just jump right in. We are living through what feels like one of the biggest tech shifts in history. But there's this really weird paradox right at the heart of it all. In just a couple of years, we've gone from a neat little chatbot to a $7 trillion bet on the future. And the numbers? Well, the numbers are starting to look really, really strange.
So this quote, this is really where the whole story gets wild. Sam Altman, the CEO of OpenAI, the company that makes ChatGPT, he just sort of casually admits that their premium subscription, the thing that people actually pay for, loses them money. Just think about that for a second. The more popular their product gets, the more money they literally set on fire.
And yeah, that brings us to the big, central question we're going to try and answer here. How is that even possible? How can a company that's at the very center of this massive tech revolution, a company valued at nearly $100 billion, be completely unprofitable on its main product? It doesn't make sense. So let's break it down.
To get it, we've got to go back to a pretty normal Wednesday in late 2022. OpenAI put a simple chatbot online, and in doing that, they basically lit a match that set the entire tech world on fire.
What's so wild here is just the speed. I mean, look at this. 1 million users in only 5 days, 100 million in 2 months. To give you some context, we have never seen anything on the internet grow this fast. Ever. It wasn't growth. It was a detonation. And this chart shows you how mind-blowing that really was. I mean, look at the other tech giants. Instagram took 2.5 years to get to the number ChatGPT hit in 60 days. Facebook took more than 4 years. This wasn't just another hit app. This was a fundamental shift happening in real time right in front of us.
So while the rest of us were just having fun, asking it to write poems or help us with our code, inside companies like Google, it was an absolute panic, a total meltdown. And the craziest part is Google had actually invented the core technology behind it, this thing called the transformer model. But they were too worried, too scared of the PR risk to release it into the wild. OpenAI didn't have that fear. And in tech, sometimes being first is everything.
And being first kicked off this immediate, totally frantic gold rush. The explosion of ChatGPT triggered a tidal wave of investment money that just started pouring into anything and everything that had AI slapped on its label.
Microsoft didn't waste any time. They were first in the door, dropping a massive $10 billion on OpenAI to lock in their spot. And that one single move just signaled to everyone else, you either get in and get in big, or you're going to be left behind.
And that frenzy, oh man, it trickled down instantly. Suddenly, you had these tiny startups with no product, no revenue, I mean literally just an idea and a Google Doc, and they were raising $100 million. If your PowerPoint had the words large language model in it, you were golden.
And yeah, this basically sums up the whole vibe. Venture capitalists just threw their rulebooks out the window. It wasn't about, hey, does this make financial sense? It was just, are you doing AI? Yes? Okay, here's a check. We started seeing AI-powered toothbrushes, AI recipe apps. The absurdity was off the charts.
But see, all this AI has to run on something. And that something is a very specific kind of computer chip called a GPU. All of a sudden, these little chips became more valuable than oil. The demand was so off the charts that the main company that makes them, NVIDIA, became one of the most valuable companies on Earth, like overnight.
So this is the really critical part. This isn't like building an app in your garage anymore. For a small startup to even get in the game, to train one AI model, they might need to rent the computers for over $1.1 million a month. And that's if you could even find them. There were year-long waiting lists, there was a black market. The cost to even play was enormous.
So the party was going strong, but after a while, someone finally turned down the music and asked the one awkward question that changes the whole mood. How much does all of this actually cost?
Let's get into the hard numbers. This is a look at OpenAI's books. They brought in $3.7 billion in revenue. Sounds great, right? But they lost $5 billion. They didn't just not make a profit. They lost more money than they even made, by a long shot.
And it gets worse. When people started forecasting what it would cost to build the infrastructure for this AI revolution by 2030, the numbers were just astronomical. We're talking $6.7 trillion. That's not just a big number, that's bigger than the entire economy of most countries.
So here's the trillion-dollar problem laid out visually. To justify spending that kind of money, the AI industry needs to be pulling in $2 trillion a year in revenue. Right now, it's making about $200 billion. That is a massive 10x gap that needs to close in just a few years.
And this is what you hear people saying privately.
The growth needed to make the math work isn't just optimistic, it's basically a fantasy. It assumes everything goes perfectly, year after year, with zero problems. It's a hockey stick drawn by someone who's never even seen a game.
And speaking of problems, right when the financial questions started getting louder, the technology itself started showing some really serious cracks. It turned out the magic chatbot wasn't always so magical.
The biggest issue is something the industry has a very polite term for: hallucination. A better word for it: lying. It's when the AI just completely makes things up. It'll cite fake studies, invent legal cases, and it'll say it with absolute, unshakable confidence.
And the examples just kept piling up.
There was an AI that recommended putting glue on pizza because it read a joke on Reddit and thought it was a real recipe. But it got way more serious. The New York Times, artists, authors, musicians, they all started filing these huge lawsuits, all asking the same basic question. Did you train your AI on our copyrighted work without asking us? And the answer was, well, yeah.
So let's recap. You've got insane costs, you've got unrealistic growth targets, and you've got fundamental problems with the technology and the law. I mean, if it looks like a bubble and it quacks like a bubble, then why hasn't it popped?
Because this isn't like the dot-com bubble back in '99, which was funded by everyday people gambling on stocks. This bubble is being inflated by the biggest, wealthiest companies on the planet: Microsoft, Google, Amazon. And they aren't investing to make a quick profit. They're investing out of pure existential fear. The fear of becoming the next BlackBerry, the one huge company that missed the next big thing. See, historically, bubbles don't just fade out, they pop. And it usually happens one of three ways. First, the easy money dries up. Second, a big player has a huge, embarrassing public failure that scares everybody else. Or third, and this is the one to watch here, one of the giants in this high-stakes poker game finally looks at their cards and decides to fold.
So where are we right now? We're not at the pop, yet. We're in that moment of maximum tension. The big players are all still spending like crazy, and reality hasn't quite punctured the hype. It's like that quiet moment in a horror movie right before everything goes wrong. We're at the inhale before the scream.
Because this bubble won't burst because of some bad press or ugly math on a spreadsheet. It'll burst when one of these tech titans finally blinks, when the cost gets too high, the payoff seems too far away, and the problems become too big to ignore. So the only real question left is, which one of them will be the first to break ranks and say, that's enough?